Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's just gone 20 past 9 AM on Friday the 26th of February 2021 and we're going to spend the next few minutes looking at the Nasdaq, our proxy the NQ1. Right then, as always on this channel we're going to start with our basic technical analysis first and our Elliott wave analysis second. But first, if you're new here, a quick rundown of the chart. We have our Elliott wave, which is all the numbers and all the letters littering the screen here. We have 4 exponential moving averages, a 10 in yellow, 20 in blue, 60 in orange and 250 in green. We have a volume profile here on the right hand side, which is a visible range, adjusts when we adjust the chart and has a built-in point of control, which is the yellow dashed line here. We have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 for the short-term moving average, 20 for the long and a 9 to smooth. Right then, first thing we're going to do is start with our basic technical analysis, and we're just going to clear the chart of all the counts so we can see clearly what's going on. As you can see here, let's just zoom in a bit for the week. We have pretty bearish candle for the week so far. This is live price data as we're looking at the futures market here. It does have a delay on it, but either way price is still live, so we can see how we've come down to the 20 exponential moving average, this blue line here, and we've bounced. We're in the process of bouncing, and we might well do for the rest of the day and into next week, I think. However, my Elliott wave count, which we'll look at later, has a much more bearish view on this correction. But from a basic technical analysis point of view, we found major weekly support here, a moving average. I have no reason to suspect it won't hold, at least for the short term, so a bounce probably already underway. Still above the 60 and above the 250, which is just miles away. Now RSI has come back down into neutral territory between the 40 and 60, having reached ever so slightly oversold levels for the last few months. Continuing this gigantic divergence from this high here in the RSI around January 2020, and then this high here in August last year, and then the highs since. We've gone high, lower high, lower high in the RSI, while we've gone high, higher high, higher high in price, even since the divergence back on the 24th of August, back here, where we set our peak in momentum on the RSI. We've gone high, lower high, lower high, lower high, and we've gone high, higher high, higher high, higher high. So big divergence between price and RSI. So is this the beginning of this divergence coming to fruition, so to speak? Sell signal on the MACD on the weekly time frame here, with the short-term moving average crossing below the long-term moving average. It would have to stay here though for the close of the week. A violent move up today undoing all of this would of course have it go straight back above the long-term moving average, which would not be confirming that. So if we do, then we could potentially see more downside in the weeks to come. Like I said, short-term moving average crossing over long-term moving average. First red bar on the histogram for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. So yeah, like 3 months. So, you know, pretty bullish on very little momentum. It looks to me like, you know, very flat. And same with the RSI, but it's been there. It's been green for weeks and weeks and weeks in momentum. So a lot of complacency in the market, and with these divergences, and also with the response I've seen on many of the brokerages I use. Just panic. I've seen some cases panic. A lot of upset people. Can't believe the Nasdaq's down 8%, which I think it's even more than that from peak to trough. Let's just have a quick look. 9% I make it, so it's down 9%, right? So it's a correction. It might not be an official CNBC, CNN correction of 10%, but it's a correction down to a major support, all right? So a lot of people have been freaking out and they're underwater, and that's just a sign of where we are in the market. We're 12 years into a bull market. There's a lot of new money, noobs in the market who don't know what they're doing, and they're just buying names, and when things go against them, they freak out. Can I just remind you all of what an actual reason to freak out is? I know some of you are experienced traders, and that's great. You don't need to think about this, but for those of you who might be new to the market and you're learning, let's go back to the year 2020 for a minute, just as a quick exercise. 2020 years ago is what I'm trying to say. 21 years ago now, actually. So here's the tech bubble, 99-2000, and the subsequent collapse of the Nasdaq. For those of us who are actually grown men and women and adults back here, then you will remember that this thing collapsed 83%. 83% the Nasdaq fell. Companies like Amazon lost 96% of their value. Okay, now am I saying that's what's going to happen now? No, I don't think we're in for an 80 or 90% correction. I do, however, think that 30 to 50 is on the cards. Is it the start of it now? Who knows? But when it comes, that's what I'm thinking. When this long-term cycle wave is over, the fifth cycle wave is complete of this bullish move up for 12 years, I'm expecting between a 30 and a 50% sell-off. It could be more. If we are completing something on a larger wave degree, super cycle degree, it could be more. But if you're freaking out over a 9% move down, you've lost all perspective in life. Okay, it's just that simple. Either that, or you're just not taking necessary precautions, you know, in the marketplace to protect yourself. So just keep that in mind. 9%, 83%. Right then, let's move down to the day time frame and continue our basic analysis. We have got the 10 exponential moving average crossing over the 20 exponential moving average, which is a bearish move. If you wanted to be bearish, you'd like to see during next week or in the coming couple of weeks the 10 and the 20 cross over the 60, with the 60 turning down towards the 250, which is still miles away. But nevertheless, if all three started trending down, that would be very bearish. However, we've been here before, guys. Cross below the 10, 20 and 60 here. Bounced. Cross below 10, 20 and 60 here, bounced. This was back during last year from September to the low in 24th of September, up to the high in the 13th of October, down to the low on the 2nd of November. This is our wave 3-4, 3 here, 4 here, A, B, C correction in our larger wave up. That's referring to our Elliott wave count. So, on the daily time frame, below the 60 exponential moving average, but we know the 20 weekly is right here, so it doesn't look like there's much support here on the daily time frame. But guess what? They didn't back here either, and they didn't back here either. Why? Because the 20 exponential moving average on the weekly is right at these lows, just as it's right at this low here. So a bounce, I think, is on the cards short term, but quite a vigorous one, I would suspect. On the daily time frame, we reached oversold conditions around 30 on the RSI, and the MACD has continued to record progressively redder and redder bearish bars. Now, what's interesting about the increase in bearish momentum here is, if you remember a few minutes ago, we were looking at the 12 weeks, which is the flat line, very boring sideways green block of momentum we saw in the RSI. Look how much more vigorous this sell-off is than all of the previous momentum before it. Now, when we were coming up into this lot here, we had these swings building up and becoming more violent up to the upside, downside, downside, and then everything just flattened out. And now we've had this move. So a swing down, swing up, swing down, swing up is what we're likely to do as we put in some kind of corrective move back up. That's what I'm suspecting. Could break down further from here, but too early to say. Perhaps I should have left the video to Saturday and then I could have been certain, but we decided to do it Friday. Right then, let's bring up our Elliott wave count and let's not waste any more time. So, absolutely beautifully, we have 1, 2, 3, 4, 5 completed Elliott wave up on the intermediate time frame, completed impulse wave up on the intermediate time frame, all fitting absolutely perfectly inside of this channel. It's just beautifully technical, that is, to see that. 1, 2, 3, 4, with the 1 and the 2, with the 3 and the 4 matching the 1 and the 2 as a pivot, literally from the top of the channel to the bottom of the channel, with the 5th right to the top of the channel. It's just beautiful. So you often see technical moves, but this is perfectly technical here in the Nasdaq. So, what does that mean? Well, I think we've topped out. The 5th of the 5th of the 5th of the 5th here, and now we've started our first move down in the 1. I could be wrong. If I am, I'd have to go back and adjust the count to make this the correction of a larger wave degree. But it's definitely not a corrective move of this wave degree, because we've taken out our wave 4 low here at 12,723.50. We have wicked through it. And on the daytime, if we're not looking at the futures, if we're looking at the NDX, we've broken this low completely. Okay, so we've we've completely broken out of this 5-wave count. So this can only be either a greater correction of a larger wave degree to finish in a higher high, or it's the wave 1 down of a bearish count downwards. So let's just zoom down to the 1 hour and have a look at what we've got so far. Right then, so from the top where we've got our wave 5, we have 5-minute waves down into a 1, A, B, C into a 2, acceleration down into a wave 3, 1, 2, 3, 4, 5, 3, A, B, C into a 4, no overlap of the 1, pure impulse wave, 5 waves down into a 5. Now, I've labelled this a 5, but it could be 3 here, 4 here, and a 5 to go lower today. That's possible, right, to find this 1. But for the moment, since we're sitting on that 20 exponential weekly support, I'm going to count that as the 5 complete, because that sounds like a logical place. Breaking this wave 4 low back here, breaking the fib channel, finding a major weekly moving average, that feels like the right place to put in a wave 1. Okay, so wave 1 intermediate time frame. Now, there was a lot of people calling this 3-wave move down an ABC, but we've now broken that low, so that can't be an ABC. Now, the reason I didn't like that, and it's been kind of annoying me the whole week listening to a lot of other channels and that suggesting it, is, let's say we're doing an ABC, right? This is what an ABC tends to look like. Right? You have a relatively violent, it could be quite vertical, you have quite a fast movement down in an A, retracement in a B, and then a very, well, not lackadaisical, but a slower move down in the C. You can have really perfectly symmetrical zigzags like this, okay? Where you go down, up, down. What you don't see in an ABC, or is very, very rare, is a move down in an A, a retracement in a B, and a more violent move down in a C. You don't see that as a rule. This is far more likely to be a 1, 2, acceleration in the 3. And that's exactly what we saw here. 1, 2, acceleration in the 3. Okay, look at the momentum here in the 3. Here's our 1, 2, acceleration in the 3. 4, quick thrust down in the 5th to finish. That is very common as well. So you get your 1. This is the impulse wave. 2, rush down in a 3, consolidation in the 4th, rush down in a 5. I know we tend to draw them more neatly than that, but this fits. This 5-wave structure is very typical for an impulse wave, whereas the idea that this was an ABC can't be now because we've taken out that low, but that's what a lot of people were counting. Just keep that in mind. You don't tend to see that acceleration in a C. Okay, you tend to see a more gradual C rather than a rush down. That's more likely to be a 3 when you see that. Okay, so that's great, Tom. We've gotten down to a 1 potentially, and we're bouncing. Could go lower from here, like I said, but let's just assume, since the market isn't open yet, that we found support and we're going to open higher. Okay, rather than at the lows, we're going to open higher. So on that basis, what are we looking at? Well, we're going to retrace in a 3-wave move back up. Now, the minimum target is going to be the 50, which could, over the next week, depends how quickly it can come up. You know how things are moving lately, so volatile, it could be up in an hour. But let's say we come up to the 50, which would be 13,283 spot 25. That's a 50% retracement. But I don't think we're going to go there. I think we're going to go much higher. The bulls are completely still in charge of this market, and after 12 years of going higher, they are going to be buying any dips on the table. So my gut tells me that whether we've bottomed here or whether we bottom lower, we're going to have a big 3-wave move back up. And then the sell-off will actually start in that accelerated wave 3 down on a larger time frame. So 1, 2, then we'll break down violently. That's what I suspect. So looking at higher targets, if we just pop a few lines on the chart here so they're easier to see. We'll put the 707 here. This colour, I don't know why I did that first. We'll put the 618 here in yellow, and then we can have a look at these in a moment. They'll all be listed nice and neatly. And we'll put the 786, but I think maybe even a 90% retracement of this move down could be on the cards. Yeah, this is why when you get this initial break from a high and you come out of a channel, this is why as a rule you don't chase it as a bear. Because if you chase it as a bear, you might be sat on a hell of a retracement back up, and that could hurt. Same rules as if you're a bull, but obviously the bulls have the trend on their side, don't they? And they've had it for years and years and years, the long-term trend. So they're going to feel much more comfortable buying the dips, and you are selling the tops. If you were a bear. All right, and so let's have a look at what we've been left with. So the 61.8% retracement. Let's just zoom in a little bit. If we were to work our way back up to the 61.8, some kind of move like this, or not like that. That would be ugly as hell, wouldn't it? Some kind of move like this. Then we'd be looking at 13,427 spot 75. If we were to push higher to the 707, we'd be looking at 13,537 spot 75. If we were pushing to the 78.6, we'd be going to the 13,637 spot 5. And if we were pushing back up to our 89% retracement of that high, we'd be looking at 13,764 spot 50. So a whole bunch of resistance to come. Okay, this is a wave one. There's no technical resistance above it. We're looking for a retracement, right? Now, if we were still inside of the wave down, we'd done a 1, we've done a 2, we're in a 3, so a 4 would have a position where it can't retrace the 1, likely to be 38.2, 23.6, blah, 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 whatever. We've completed a 1, so we're looking for a move up in a 2, and the 2 has no limit other than the top of where the wave 1 began, which is all the way back up here at 13,902. That's where we topped. We could come all the way up to just shy of that and still be in a wave 2. This is the hardest time of a new move down, of a pivot of a market, the hardest time to get in, because you're going to want to chase the move down, when really you've got to be, you should be patient to wait for this and then get that accelerating wave 3 down and hunky-dory. Now, remember the disclaimer, this is not trading or financial advice in any way. It's just how I'm thinking at the moment. I'm already short, but I would like to get more short if I get the opportunity. So that's the Nasdaq, guys. I think we may have topped. I'm not shy on this channel of sticking my neck out. I've done it before and I've been wrong before. I could be wrong again now, but this is how I'm seeing things, and this is what I'm going to go with for the meantime. If you're new to this channel and you've liked what you've seen, please subscribe, smash the like button, let us know what you think in the comment section below if you want to, of course. Feel free to share this video or any of them with anybody you like. And yeah, take care. I've got a lot of videos to do this weekend, today and tomorrow, so stay tuned. I'll be back with you shortly. Bye bye.